Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Westinghouse Air Brake Technologies CORP quarterly report. Westinghouse Air Brake Technologies Corporation offers a wide range of technology-based products and services to the freight rail and passenger transit industries worldwide. Some of its key offerings include locomotives and equipment propulsion systems and marine products, positive train control equipment and braking systems, railway electronics, signal design, and engineering services, industrial Internet of Things hardware and software solutions, transportation management, and port optimization solutions, network optimization solutions, freight car trucks, and related components, air compressors, HVAC systems and heat transfer components, rail gear, signaling, and switch products, turbochargers. The company also provides various services such as locomotive overhauls, modernizations, and refurbishment, maintenance of locomotives and cars, unit exchange of locomotive components, long-term parts arrangements, maintenance of way equipment and services. The Westinghouse Air Brake Technologies Corp. WAB stock price has experienced no significant changes over the past year, despite a 3.9% net increase. Several factors have influenced WAB stock price movements during this period. The company reported strong third-quarter 2025 financial results, exceeding analyst expectations, but the stock declined due to market reactions. WAB also completed the acquisition of Inspection Technologies and secured a major locomotive contract with Kazakhstan Rail, worth $4.2 billion. Additionally, the company announced several orders, including a $125 million ultra-class mining order and $140 million in transit brake orders, driven by demand in India. Analysts have maintained a positive outlook on WAB stock, with an average rating of buy and a 12-month price target of $222.56. The equity buyback plan update and SWOT analysis also provided insights into the company's financial health and operational challenges. The lack of significant changes in WAB stock price can be attributed to the company's consistent performance, strategic initiatives, and market reactions to its announcements. While the net increase over the last year was reported as 1.98% by one source and 4.45% by another, these figures do not reflect the considerable volatility within the period. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. The company's revenue grew primarily due to an increase in sales of goods by $194 million, 13.5%, driven by higher equipment sales, particularly in North America. Acquisitions also contributed significantly, with Inspection Technologies adding $128 million and freight segment acquisitions generating $161 million. Organic growth was another key factor, with the freight segment experiencing a 148% increase. Revenue decline drivers. On the other hand, revenue declined due to a decrease in sales of services by $31 million, 6.3%, as well as lower sales in digital intelligence and components. Portfolio optimization also led to a decline in revenue, particularly in the freight segment. Overall, the company's revenue growth was driven by a combination of increased sales, acquisitions, and organic growth, while revenue decline was primarily due to decreased sales of services and portfolio optimization. Net income and profit margins experienced significant changes over the given period. Initially, net income increased by $143 million due to higher sales, improved gross margin, and decreased other expenses. This trend continued with a $24 million increase from 2024 to 2025, driven by strong aftermarket and original equipment manufacturing sales, increased productivity, and cost savings. However, the gross profit margins showed mixed results. The overall gross margin decreased from 67% to 65.3%, but later improved by 1.4 percentage points. Operating margins also fluctuated, decreasing from 16.8% to 17.7% initially, before declining further to 19.8% in 2025. Segment-wise analysis revealed increases in gross profit margins for both freight and transit segments, with notable improvements in the freight segment. These changes suggest a complex interplay of factors influencing net income and profit margins, with some areas showing improvement while others experience decline. The company's financial performance indicates a strong ability to generate cash from its core operations. The data shows that the company has consistently produced positive operating cash flows, with a notable increase of $767 million in 2025. This trend suggests that the business is generating sufficient funds to cover its operational expenses and invest in growth initiatives, positioning it for long-term success. The company's debt level has experienced significant growth over the past year. Total liabilities have increased from $8,569 million to $10,432 million, while long-term debt has risen from $3,480 million to $5,034 million. This increase in debt is evident across multiple pages of the financial summary. In contrast, interest expenses have shown mixed results. While some pages indicate an increase in interest expenses, others suggest a decrease or no significant change. However, one consistent trend is that long-term debt has increased, which typically leads to higher interest expenses. Despite this, the net interest expense actually decreased from -$52 million to -$65 million, indicating a reduction in interest costs. Management's outlook and strategy. The company's management is focused on driving operational efficiency and improving profitability through reduced manufacturing complexity. They are also taking steps to mitigate macroeconomic volatility by implementing price escalations and surcharges. Additionally, they expect accelerated growth from recent acquisitions, such as Inspection Technologies and Frauscher. To drive growth, the company will invest in sustainable infrastructure, expand its fleet, and increase passenger ridership levels in the transit segment. Management is also prioritizing recurring revenue through service contracts and new orders. They aim to maintain flexibility in capital resources through various financing arrangements. Overall, management has a positive outlook on future prospects but remains cautious about potential economic and industry impacts. The company has made several significant acquisitions and divestitures in recent years. Key acquisitions include Dellner Coupler's Frauscher Sensor Technology Group, GmbH Evidence Inspection Technologies Division, for $1.788 billion, Frauscher for approximately $770 million. Additionally, the company has also made a potential acquisition of GE Transportation pending court approval. On the other hand, the company has divested receivables under the revolving receivables program prior to January 2025, amount not specified. GE Transportation is also being considered for divestiture if ordered by the court. The company has a history of returning value to its shareholders through both dividends and share buybacks. Specifically, the company paid dividends in 2024 and 2025, indicating a commitment to rewarding investors through cash distributions. Additionally, in 2025, the company repurchased stock for $148 million, demonstrating a willingness to use capital to reduce outstanding shares and boost earnings per share. Concerns about inventory buildup and supply chain disruption are evident in the financial summary. Inventory levels have increased by $433 million from December 31, 2024 to September 30, 2025, indicating a potential buildup. Additionally, changes in inventory due to increased raw material costs and tariffs resulted in a $113 million loss. Supply chain disruptions caused by macroeconomic factors such as tariffs, trade negotiations, and regional conflicts pose another concern. These disruptions could lead to negative impacts on revenue and cost increases. The company has acknowledged supply chain disruptions as a potential risk factor, further emphasizing the need for caution. That concludes the financial summary for Westinghouse Air Brake Technologies CORP. Feel free to comment below, and I will be happy to answer them when possible.